What's up guys, it's Louis here, hope you are doing great. In this video I'm going to show you guys how I made around 250,000 Rand tax-free in just 6 months using the BRRRR strategy. And yes, that's an actual property investment strategy and it stands for buy, rehab, rent out, refinance and repeat. This is a very powerful strategy. So if you want to find out how I built my multi-million Rand property portfolio using this strategy, consider watching until the end. If this is your first time here, welcome to the channel. Consider subscribing, like this video and share it with a friend or a family member that you know will benefit from this information. In this video, I'm going to show you guys how the BRRRR strategy works and how I acquire properties using this strategy and how I grow my portfolio constantly using this strategy. I'm going to show you guys an actual example of one of these deals and I'm going to explain how the whole process works. The first part of the strategy is finding and buying a property. So I found a property that was listed on Property 24 for quite a while and I immediately identified that this is a motivated seller. This is a very important part of the strategy because we have to find people that are motivated to sell their properties. Most of the time it can be people that is in distress and it might sound bad, but we are actually helping them out to get rid of the property that they are trying to sell. This specific person was an elderly lady that had to move to a nursing home and her son was working in America and he was actually handling the transaction and they wanted the property to be sold as quickly as possible so that they can fund her nursing home. So the property was listed for 400,000 Rand. I ended up making an offer of 300,000 Rand and at the end it was accepted. So I bought the property for around 100,000 Rand less than it was listed for and I went ahead and registered the property for 450,000 Rand. This is again a very important part of this strategy when it comes to refinancing and we'll get to that in just a minute. So we completed the first step of the strategy, which is the buy part. Now we had to rehab or renovate the property. I'm going to show you guys a few photos of what the flat looked like before the rehab and then after the rehab. This is just some basic photos that I took on my cell phone of the property before we moved in and it really didn't look too great. It's just a normal flat with dirty old carpet, so it looked quite shabby. Nothing special, and like you guys can see, it's really not the best looking property, and that was great and that helped me to negotiate a lower offer price. This was some photos during the renovation and I actually removed the cupboards. I made a whole video about this renovation if you wanted to check that out. So after we renovated the property, it ended up looking like this. And we can see that it looks completely different and it really makes a huge difference just painting and putting in a few small light fixtures and adding a small touch to the flat. We finished the rehab and the renovation part. So we bought and we renovated. Now we had to rent out the property and that's exactly what I did. I was able to rent out the property to a mid-income tenant for 4,500 Rand and this person had a really good credit score, so I was confident to place this tenant. This specific flat was rented out for around 1,250 Rand more than similar flats in the same block, and that is how we created value. Obviously a person that wants to rent in this area will rather stay in this flat than flats that are old and dirty and has carpets. So we have the buy, we have the rehab, now we have the rent. So after 6 months of this tenant staying in this property, I went back to the bank, or I actually went back to my bond originator and I told them that I want to refinance this property and get access to the 150,000 Rand. So with this process, it's important to have a good team member like a bond originator on your side. They make the whole process much easier. The banks wanted to evaluate my affordability again. They wanted to make sure that the property in this area can actually be sold for that specific amount, which was 450,000 Rand. And after they've done the evaluation, they sent me a few forms to sign and boom, they paid out the money into my business account. 6 months down the line, I ended up with access to around 150,000 Rand which was tax-free because it's a further loan. That money can't be taxed. And this is very important because we are creating equity by renovating the property and renting it out and refinancing it later on, which gives us access to money to repeat the process. Before we get to the repeat part, something that is very important to understand is to use your money that was paid out to your account and to put it back into your access bond. This means if I receive the money, my bond payment will go up. So I have to pay the money back into the access bond. I still have access to the money, but my monthly payment will still be exactly the same unless I actually use some of that money. This is very important because we only have to pay for the money as soon as we use it. If you don't understand the concept just yet, just bear with me. Something that is very important is to understand that the only way that we can get access to that equity or the 150,000 Rand was to either refinance the property or to actually sell the property. And I don't want to sell an asset that is creating wealth. And again, you have to pay closing costs, you have to wait, and it's a very illiquid process to sell a property. So refinancing it gives us access to the money while keeping the asset that can continue to generate money for us. So after the property was refinanced, I used a portion of that refinance money and I bought a second flat, and I repeated the exact same process. So here's just a few of the before photos. Again, it's yellow and it's dirty. This place was infested with cockroaches, but it's really, I saw the potential and I like this this setup of flats. Yeah, so like you guys can see, it's just a normal basic flat. It really doesn't look too great. After the renovation, it looked like this. And again, I personally would love to stay in a place like this. I think it looked quite good. So what I've done was to use the first property's refinance money to pay for the bond and registration cost as well as the renovations. And this specific deal was generating enough cash flow to cover the shortfall that I created on the first property. And basically with the money that I have in this deal, the second one, I was able to refinance that specific deal again, and I've repeated the process again. So we bought a property, we rehabilitated it, we rented it out, we refinanced it, and we repeat the process again. Then I bought a second property. I used the previous deal's equity to pay for the registration and transfer cost as well as the rehabilitation cost. We rented it out again to a quality tenant, and I refinanced that flat again. If this is something that sounds intriguing to you, but you don't yet understand all the details, feel free to reach out, send me an email, and we can always meet up and talk about this exact strategy. I'm busy creating a course covering my property investment strategy and how I was able to generate a lot of income using none of my own money. So if this is something that you are interested in, give this video a thumbs up, comment down below, and I'll see you guys in the next video.